welcome to Dollars and Making Sense, a weekly show about finance, money and investing. I'm your host, Ray Treverson. We broadcast locally on Radio Northern Beaches and around Australia on the Community Radio Network through the Community Broadcast Association of Australia. Always pleased to have regional centres listening in and across potentially 420 community radio stations. We don't have that many on our show, but certainly it's getting into double digits and it's really nice. I really like to welcome back Justin Bott from Services Australia. You may know them as Centrelink. And this is sort of part two about a series of shows we do at this time of year around tax time. And it's really to help you, the listening audience, really become attuned to the fact that government are not mind readers, okay? You may think, there are conspiracy theories out there that we walk around with chips on the back of our necks or whatever. And I still remember that from that interesting show back in the day with David Duchovny and Gillian Anderson. But no, they don't. They aren't mind readers. And Justin, we're here today to talk about notifiable events. So what are the things that we need to let you guys know in government to make our lives easier, but also yours? So welcome to the show.
Thank you so much. And so if you are getting a payment from Services Australia, then you as a customer have obligations to let Services Australia know about changes to your circumstances. And so what we're talking about here is there's quite a large list. And I would actually say, before we go into it, the best way to find that list is to actually look at the letters that we send you. So whether it's the hard copy letter that goes in the letterbox.
You mean actually read something that got sent to them? Come on.
Yeah, I'm choose to make no comment on that one. Or the online version that goes to your MyGov inbox. On the back of that letter, you'll actually probably find that there is often a quite comprehensive list of things that you need to tell us to make sure that you're getting the right rate of payment, which is what this is all really about. And so we're talking about things like going overseas, starting work, stopping work, becoming a member of a couple, stopping being a member of a couple, changing address, but also about changes to your income and assets. So again, I really encourage you to have a look at the letters that you've received from us, have a look at the back of them, have a read, because a lot of the information that you need to know, we actually tell you quite regularly in the letters we send out.
I guess I'd love to be a fly on a wall or maybe listening to the recordings, because I know you guys, in the contact centers do record the conversations, not just for training purposes, but also to protect one's rear end. But I'd love to be able to hear sometimes when people say, but I told the bank. What do you mean you don't know that things changed? I told the bank 6 months ago. I thought you guys would know as well. There's that fallacy out there, isn't there?
Oh, yeah. That misinformation has moved almost to the level of myth that I don't need to let Services Australia know, because you're the government, don't you already know? I don't need to tell you that my bank account's changed, because you can just hit Alt-Tab on your computer and you can see what the balance of my XXX bank balance is. And that's absolutely not the case. So Services Australia does not have the ability to find out that information. That it is up to a customer to let us know. So it's as I said, it's your responsibility to tell us that you've had these changes circumstances, because if you don't tell us, then if we've paid you money that you're not entitled to and you don't tell us, then we've got the implication of we actually may be required to ask for you to pay that money back. So the rule is 14 days. You've got to tell us within 14 days of changes your circumstances. If you don't tell us within 14 days of these changes and you receive payments that you shouldn't have received, then we're going to ask for that money back. If you don't tell us within 14 days of the changes of circumstances and you've got less payments than you're entitled to, then unfortunately that's money you just missed out on because you haven't kept us up to date and haven't let us know. And so when we say that we don't know, it's actually under your responsibility as a customer to tell us within that window that these circumstances have changed. Now, if you have, that even means that if you've engaged other people, including your financial professionals, who say that they're going to do this on your behalf and who may well be doing it, it's still on your head if the mistake is made. So as a customer, if you have engaged somebody to be a nominee and act on your behalf, you still need to be engaged, because if you receive money you're not entitled to, it's not your financial professional that's going to be required to pay that money back. It's going to be you that's required to pay that money back. So still stay engaged, obviously as much as you're capable of, but be aware that it's ultimately you're the one responsible for your own payments.
I think it really reminds me of that lovely idiom, don't assume. It makes an ass out of you and me, or an ass out of you and me. But it's absolutely true, isn't it? I mean, you make a very valid point that whilst we may rely on accountants and financial professionals to do things on our behalf, once you sign the document that says this is a true and accurate statement for my tax situation or my income, or you've made a declaration to Services Australia, it's you that's on the hook, even if you have an agent that operates that on your behalf. And I know, when my mum was crook, my sister was her full-time carer. It was mum's account that was the one that got debited or credited. And if mistakes were made, it was mum's account that the mistake was made on. And I think it's really, really important. You can't shovel blame elsewhere, even if you've delegated. Ultimately you are responsible, aren't you?
That's right. You're the person receiving the payments. You're the person that's accepted the financial advice. You're the person that has acted maybe with good faith, but still based on the information that you're given. But if you've done something that's wrong, then ultimately you're the one that's going to be responsible. And from Services Australia's perspective, that means ultimately you'd be the one that would be expected to pay the money back, because it's the money that's been paid to you. So yeah, ultimately it is still onto your head. But that's where it's important to remember these 14-day rules, because as long as you keep letting us know about these changes within 14 days, you're covering your bases and you're doing what you're required to do.
Now, I have a couple of young adults under my roof that are drawing Services Australia payments at the moment. And so 14 days is very much in their mind, because they get a payment, sometimes full, sometimes partial, because they are working, but they are reporting on a fortnightly basis. But I was plugged something into my internet search about, what are notifiable events. And I think, people also need to understand that you're human. You are civil servants and you work for the government and the like, but you also have a heart. And I was reading there about, when somebody dies, you've got to let Services Australia know. But I think there's also a bit of slack there, that if somebody, a spouse has lost their partner and, they've got a lot of stuff going on, there's a fair bit of leeway given there, isn't there?
Well, yes and no. So if I've lost my partner, then Services Australia is still expected to be notified that they've lost the person who's receiving a payment. That person has passed away, whether it's my partner, whether it's mum, and I need to let her know within 14 days. And again, if that person receives payments that they're not entitled to, then the estate may well be asked to pay that money back. But if I've lost my partner, one of the things that happen is that, yes, you're owed a payment. You're now a single person, not a member of a couple. But we don't maintain your partner's assets against you. So we'll look at if you've got joint assets, we'll look at 50% of joint assets. Anything that's in your name will still be yours and be assessable under you. But anything that was in your partner's name, we're not going to assume is now your asset. And we actually will give you time. So we stay away for a few months under those circumstances, to knowing that estates just aren't done that quickly, but also to give you time to process and go through what you need to go through. And then we'll send you a form that says, all right, now it's been a period of time. Can you now tell us where everything stands? And even then, if the estate isn't finalised, until an estate's finalised, they're not your assets. So they may not come to you for 6 months or a year, depending on what those assets might be. So we're not going to count them as yours until legally they are yours. Now, things like shared bank accounts, if you're the joint owner of a bank account, then when one person passes away, very quickly, very legally, they become the asset of the surviving partner. And that's what we'll get within that first 3-month window. But bigger assets that may go through different, properties that may have to be sold, all that sort of stuff, if that takes a long time to be settled, then that's not going to affect you until the estate is finalised and those assets have actually been distributed to you. And then you need to let us know within 14 days of that actually happening. Yep.
So 14 days is that wonderful time frame. Now, we live in a modern world where, not everyone is drawing a regular salary. There's gig workers, there are itinerants, there's casuals. And so they're not always receiving money in a traditional fashion. So if you're not getting a wage in the traditional way, but you're making income or you're making profit, how do you report that?
Well, you're talking about the household members that are getting payments, and they are more than likely reporting every fortnight using their phone with their MyGov app or the my.gov.au on the computer. And when you're receiving a payment, if you've got ongoing income, we will actually get you to report every fortnight. Now, when I said the 14 days, I should also say, unless you're reporting every fortnight, then just tell us on that normal reporting day, because that will be, basically, that's going to be within the 14-day window. Now, if you're reporting your income, you're doing it on either on the app or using the self-service phone numbers that we've got, telling us about the changes of income as it happens over the fortnight. If you didn't get paid anything at all, still tell us that your income was zero, because your rate changes every fortnight depending on what income you're reporting. Now, there's going to be a few times when you're not actually doing that. That might be when you just started a brand new job. So we're not, obviously you weren't working beforehand, so we're not asking you to report everything. So you tell us within 14 days that you started a new job, then we can put you onto the fortnightly reporting. Or it might be, as you said, an interim job. I just worked at the last election. So I only worked for a day and a half or 2 days or something, and then I'm not working for them again. I just need to report within 14 days that I've done that work. Then, because it's been and done and it's not going to happen again, we're not going to put you on regular reporting for that. But again, that 14-day window is the important message there.
I think ultimately the key message to anyone listening to this is report early, report often, and even if you're not sure. And again, we talked about this in part one of the show we did before today's interview. You know, we're talking about how if you're not sure how to use these tools, you can go and get trained on how to use these apps. And so I think there are a lot of good facilities that, you know, nobody likes sitting in a queue for too long, but the apps make life a lot simpler to be able to do that kind of reporting. So,
as does the self-reporting phone number, which is basically you just ringing a computer.
Oh, right.
So,
okay.
Yeah. So you're just ringing into the computer and giving your details and giving your information over the voice, with the voice. There's no queue because you're dialing directly into the computer, and then you hang up and your reporting is done. So yes, it's quite easy to do with your MyGov account, but it's also easy to do. But that's not self-reporting everything. That's wages in particular. You can use that system for.
Sure.
Yep.
Okay, we're about half time. You're here on Dollars and Making Sense, a weekly show about finance, money, and investing. I'm your host, Ray Treverson. I'm really pleased to have at the microphone Justin Bott, who is the Media Relations Officer from Services Australia. We're going to take a short break and we'll be back in just a moment. Hi, and thank you for listening to Dollars and Making Sense, a weekly radio program about finance, money, and investing on Radio Northern Beaches and nationally on the Community Radio Network around Australia. The views, comments, and opinions aired during our program should not be construed or viewed as financial advice. Any commentary is general advice only and does not take into account your objectives, financial situation, or needs. You should consider whether the advice is suitable for you and your personal circumstances. If in doubt, you should contact an authorised licensed financial planner. We welcome questions and feedback, and you can get in touch with us via our blog, social media channels, or email. Please search for Dollars and Making Sense in your favourite podcast platform or check out our blog at otgcapital.com.au/blog. Hi, and welcome back to Dollars and Making Sense, a weekly show about finance, money, and investing. I'm your host, Ray Treverson. And with me this week is Justin Bott, who is the Media Relations Officer for Services Australia. You may know them as Centrelink. Now, we have been talking about tax. It's that time of the year. And we previously have talked about submitting tax returns if you are getting payments. Today, what we're focusing on primarily is notifiable events. And the reason we're talking about this, ladies and gentlemen, is that despite all these radio and TV shows that are out there with conspiracy theories, the government do not have tabs on us all the time, and they definitely can't read our minds. And so, Justin, we've been talking before we went to the break about what notifiable events are. And so we covered off a number of those: change of circumstances, jobs, you know, making more, making less, etc. Now, I wanted to move on a little bit to, things that people have but sort of change every now and then. So what about financial assets? What about bank balances, etc.? What happens here?
So you do need to let us know if those change, but it's not like you need to let us know every time it changes. So, if I went out for dinner last night and spent $75, do I need to let Services Australia know that my bank account's changed by $75? And the answer to that is no, you don't. And in saying that, even in saying that, if you're doing these notifications online through MyGov, it is actually so much easier to let us know about these changes that it's not that hard to do. But the rules are total financial assets. So we're looking at financial assets. We're going to talk about bank accounts, managed investments, gifts, loans to other people, super funds, account-based pensions, those sorts of things. If the total balance of your financial assets has increased by $2,000 or more, then you are supposed to let Services Australia know again within 14 days. So that is the basic premise when it comes to those financial assets. $2,000 is the limit. Again, if you can tell us about that sort of thing online, then that's great. Now, the other side of that story, though, is if you're getting a part rate pension, then your pension's reduced because of either your assessable income or your assessable assets. Then reductions in your financial assets, even though they may not be what we would call a notifiable event, reductions in your financial assets may well trigger a higher rate of payment for you. So you might not have to tell us, but it might be to your advantage to tell us. And if that's something you want to do, you're more than welcome to do that as well. Balances go down, absolutely let us know. Balances go up, tell us if they go over $2,000 or more.
So we happen to live in a country that is renowned for share trading investing, and so a lot of people do that. What's the situation with shares?
Yeah, shares are a little bit different because if you thought your bank account moved, that's nothing in comparison to share prices that are going all over the place on a minute by minute. So we actually do treat shares, the valuation of shares, differently than we would the rest of the financial assets that you might own. And what we're talking about here is two particular dates, and they're the 20th of March and the 20th of September. And what we do is that we set the value of your shares on those dates. So we set it at the 20th of March, and then we'll reset it again on the 20th of September and just keep doing that year in and year out. And we maintain the value of your shares for that 6-month period until the next 20th of whatever date comes. So March has just happened. We set the values then. We're going to maintain those values until September, basically, unless you tell us to do otherwise. So what that means is we acknowledge the fact that shares may be more in value over that time, maybe less in value over that time, but eventually we'll catch up on the 20th of September and we'll do it then. So from a customer's perspective, what that means is that you do not have to tell us about increases in the value of your shares. It's not something, if your shares change in value, that's not what we would call a notifiable event. You don't have to tell us about those. And again, the same sort of message if you're getting a part rate pension, you don't have to tell us if your shares go down in value as well. But if you're a part rate pensioner, decreases in the value of your shares may mean you get more in the way of payments. You might want to let us know that your shares have gone down in value, but you don't have to let us know. Now, remember, and I always say this, that when we revalue one of your shares, we revalue all your shares. So it may be that one has gone down in value, but the other 5 have gone up in value. You came along hoping that your pension rate would go up and actually found it went down because the total value of your shares have actually increased and your assets have gone up and your income has gone up, and so your pension has gone down. So you don't need to tell us about changes in the value of your shares, but you do need to tell us about changes in the number of your shares. So if you buy them, you sell them, you get them given to you as part of a dividend reinvestment scheme, then that is what we would call a notifiable event. That is something you have to tell us about, and you have to tell us within 14 days. So not about the fact that the shares have changed in value, but if the shares have changed in number, that's what you have to tell us about.
Okay, so you've just mentioned dividend reinvestment. So I just wanted to quickly then ask, what's the situation if, as many people do, they actually take dividends as a payment? Is that then subject to the $2,000 rule, or do we need to let Services Australia know about that change?
From an income perspective, you don't need to let us know because shares are what we would call a deemed financial asset.
Okay.
So what that means is that we add shares, all those other assets that I was talking about, we add them all together to get a grand total, and then we apply our deeming rates, which is the interest rate that we determine or decree or deem that these investments are generating, whether they're giving them or not. It's actually irrelevant. So from that perspective, it's 0.25% up to a maximum of 2.25%. And it stays at one and then moves to the other. And the point that it changes from one to the other is different whether you're a single person or member of a couple. But because shares are deemed financial assets, we are determining an income from them all the time. And from that perspective, it actually doesn't really matter when the income hits because we were counting it all the time. So we're not going to count any dividend as an income because we're not worried about the dividend, we're worried about the deeming. The only issue that you need to tell us about with dividends being received is back to that whole idea of my bank balances have increased by $2,000 or more. So if these financial assets have gone up because this dividend has now been received, it's sitting in my bank account, therefore it's potentially going to affect the payment that I'm getting. So, yeah, from that perspective, that's all we need to worry about. From the income perspective, we don't need to know about because it's a deemed financial asset.
Cool. So what about other types of assets? So when I think about real estate, for example, it'd be hard to pick a date that started something, something started increasing in value. And, with the movements now in interest rates, the markets are saying, oh, they're going to start going up again. How does that get treated?
Yeah, so my $400,000 investment property is now a $420,000 investment property. On what exact date did that $20,000 increase happen? And there is no exact date. There was no particular time that occurred. So, yeah, what we do when it comes to investment properties is that when you apply for a payment and you've got an investment property or a holiday home, we're actually going to value that property ourselves. So we'll take the cost of that. That's not at the cost of the customer. So we're going to work out what the market says that property is worth right at the very beginning. And we're going to maintain that value for the first 12 months. And on the anniversary of you applying for payments, it's actually then we're going to revalue that property at that point. So every year on the anniversary of your payments, we're going to revalue the property. So don't be surprised on your birthday to notice that there might be a change in the asset value. It's an automatic process. Again, it's at no cost to the customer. It's just something that we do. And that's just how we maintain the increased asset. Again, acknowledging that, yes, it may go up and down in value because of market forces, but we'll take that into account. The only difference from that is if something has actually happened to the property to significantly change the value, like it's in northern New South Wales at the moment, it's been unfortunately affected by flooding, the property's been damaged, decreased in value, or I've put in a new spa or new roof or something that's increased the market value of that property because of something that we've done, then you need to tell us this property needs to be revalued because the baseline has changed, if you like.
Sure.
But apart from that, we will just take care of it once a year and set it, and we'll take care of it again on the anniversary of you being on payments.
Cool. So, look, I guess a lot of people have mortgages still on their real estate, even going into retirement. Does that make a difference?
When we're looking at something like a holiday home or an investment property, Services Australia is able to reduce the value of the holiday home or investment property by any mortgages that are secured against that piece of real estate. So if I've got a $500,000 investment property with a $350,000 mortgage solely and wholly secured against that investment property, then the asset value of the property is the difference between the two, so it'll be $150,000. If the mortgage is secured jointly between the investment property and my $1.whatever million home, then because the banks like to know that they've got this great bigger asset being used as security for the loan rather than the smaller investment property, then the proportion of the mortgage can be used to reduce the value of the property, but not the whole amount. If the bank would only allow me to use all of my home as the underlying asset to create the mortgage, then none of the mortgage is secured against the investment property. The full value, in that case, the full $500,000 asset would be used. So the investment property or the holiday home has to be the security for the mortgage in order for Services Australia to be able to use the mortgage to reduce the assessable asset.
Yeah, it's an important point. It's an important point for sure. So, look, we're in the process of wrapping up now. I always like to leave, some key takeaways, and I think some golden rules here. 14 days is the big thing. So, if something notifiable occurs, you got 14 days. But as I think we said before we went to our short break, notify early, notify often. Don't you think?
Yeah, as long as you're keeping within that window, then you're doing the best that you can to make sure the payments that you get are the most accurate. And what hits your bank every fortnight is the money that you're entitled to receive every fortnight. So that's always a good place to be.
Yeah, and again, ladies and gents, don't forget, when you're trying to ring and let them know or you send them a note, that's always held on file. And so if you're making attempts to notify. And you mentioned before there's a dial-up service that you ring and you actually talk directly to a computer, so you can actually notify people that way. You can notify Services Australia that way as well, can't you?
That one's only really for reporting income. It doesn't.
Income.
If
Okay.
I need to tell a bank account, I can't do that. I can use the online services through your MyGov account, linked through the MyGov webpage or the MyGov app or the Express Plus Centrelink app, to tell us of changes to a whole range of different things online. But you can always go into your local office. You can always give us a call on your normal payment reporting line, and you can speak to an officer over the phone. That particular phone number, that self-service phone number, is to report, this is what I've earned, this is my reference number, this is my gross income for the fortnight. Should point out, we are looking at gross income when we're talking about wages. I'm just going to quickly throw that in there. Just the before tax income is the one that we're looking at. Because we're not the Australian Taxation Office, we're Services Australia. We want to know the gross figure.
And again, just reading from your great blurb here, and if you're unsure at any point, you can go to the website servicesaustralia.gov.au and plug in a great search thing saying update details, and all the info's there, as it always is, I guess. Justin, always a pleasure to have you on the show. You're here on Dollars and Making Sense. Justin Bott from Services Australia. Until next time, sir.
Thanks for having me.
Wonderful.